So let's go ahead and take a look back at November 2020 when Trump signed the original executive order with the old number addressing the threat from securities investments that finance communist Chinese military companies. This EO basically did what the new amended EO 14032 does. However, at the time that it was implemented, there were far less companies on the sanctioned list. Now there are more companies. That means the mother of all short squeezes, or at least the squeeze that's probably going to be happening, would therefore be bigger than what happened on January 28th.
That's good logic, right? It makes sense. More companies, bigger squeeze.
The executive order took place on January 28, 2021. And what exactly happened? Well, GameStop went absolute bonkers. If you go to AMC's chart on Google, because it's easier to look at, 15th, $2.33, all the way to January 29th, 13.26. So if you just take a look at the percent change, that is 469% that AMC went up within 15 days. And this was before all the massive price movement.
Okay, so this is a good example of correlation not equaling causation. We looked at this executive order catalyst nonsense when Boss Blunts was promoting it a few weeks back. It's low-hanging fruit to look at something like an executive order and a price chart and see that they seem to correlate and come to the conclusion that, hey, well, this must be the cause. All right, we'll just hang on to that for a second.
Very interesting due diligence right here. And again, they did dump shortly afterwards, but there was a moment of a squeeze that happened.
So there's the assertion that these margin calls, supposedly, from this executive order caused the squeeze in January. So if you believe in this theory, what you're saying is that it was not retail who caused the squeeze. That's essentially what you're saying. Is that what Boss Blunts is saying as well? I don't know. Here I have shaded areas of the intense volume. 1.25 billion shares traded on January 27th. Just under 600 million shares, 600 million shares. Hovering around 600 million shares around January 27th. Likewise, in late May, early June, 700 million shares, 500 million shares, 766 million, 500 million, 300 million, when you see these massive moves. Also, when you look at the option chain analysis from last May, so this is a feature in Thinkorswim, you can go back in time with the think back function. You can say, I want to look at what the option chain was last May 3rd, 2021. And here we are at the June 18th, 2021 expiration. And we can see that the highest strike was 40. And already it had 76,000 contracts open at that point, and they were selling for 27 cents a piece, or $27 per contract. Now, if we skip ahead in time, say to May 17th, we see 113,000 of these contracts are now open, trading at 74 cents a piece. Skip ahead to the end of the month. May 28th, what happened? Well, first of all, what do we notice? A lot of extra strikes were added, from 41 all the way up to 70. But we have 225,000 of these contracts open, and they're now trading for $5 a piece. That's $500 per contract. Okay, now increment it day by day from this point. So we'll get through this weekend here. Now we're on June 1st, and we see the $40 calls, 214,000 open. Moving ahead, June 2nd. Now they've gone deep in the money. Here's the 40 calls. They are selling for $33.45 a piece. That's $3,300 a piece, with 214,000 of them open and a trading volume of 206,000. And keep in mind, we're just looking at one strike. We're just zeroing in on this $40 strike, June 3rd. So now we start to see the open interest wane. 138,000 open, 133,000 open, 128,000 open, 125, 118. We see the price declining as well throughout this period here. So the point of all this is to explain that if you believe in this executive order theory, that's what caused the previous run-ups. That's what caused the squeeze. You're discounting all of the retail involvement, all of the intense call option buying pressure, the gamma squeeze, the massive retail influx. You're discounting all of that, and you're saying, no, it was because of an executive order that nobody knew about at the time. Nobody was hyping. Nobody brought it to anybody's attention. The even bigger thing is when you look at when these executive orders went into effect, when they actually went into effect versus when they were signed, those dates don't line up either. So let's continue with this video. By the way, this is from LAGHacks.
So meme stocks ran hard and they plummeted a few days later. How did this happen? Well, Biden moved the EO and gave the hedge funds more time to gather themselves from getting obliterated. You know, Melvin Capital, may they rest in peace. Biden ended up extending the EO a few days later to May 27th, 2021. Right? And so what exactly happened when May 27th came around? Well, we saw another extended run up, right? GameStop went up. AMC also did go up. And so very, very similar movement.
Again, that's when we saw that massive influx of call options. And we just looked at one strike. You can go back and look at all the strikes on your own time. As long as you have a Thinkorswim account, you've got access to it. All that historical market data. Very useful.
AMC went to 72. This was the all-time high for AMC. So we had some more margin calls. And now exactly what is going on? We have executive 14032. So this is the new executive order that is coming out on June 3rd, 2022. And right here is the due diligence, 12:01 a.m. Eastern Daylight Time on June 3rd, 2022, with respect to any person listed in the annex to this order, or 12:01 a.m. Eastern Daylight. Again, all this is going to happen, exact same executive order with more Chinese companies listed. Again, there are 70 plus companies listed in this sanctioned list. So
here's the executive order, the one that Joe Biden signed and issued in June of 2021. So it clearly states that the purchase or sale of publicly traded securities described in subsection 1 of this section made solely to effect the divestment in whole or in part of such securities by a U.S. person is permitted prior to 12:01 a.m. Eastern Daylight Time on June 3rd, 2022. So that means that basically they were giving people 1 year to get rid of these securities that are now prohibited to own. So this is the part that people like LAGHacks and Boss Blunts don't explain, that there's a grace period baked into these executive orders. So the notion that a squeeze would happen when the executive orders are initially signed and issued makes no sense, because they have a year to get rid of them. Now, what do you think they've been doing for the last year? Why would they wait until the last second? And for that matter, why would they do it immediately when the executive order was issued? Makes no sense. Makes no sense.
Basically, what we could be seeing happening is AMC having another run-up leading to that date. And again, it's only about a month and a half away. And according to this dark pool cycle, again, I'm a very firm believer of the rolling 20-day position as a good indicator of what AMC is going to do. We've seen this over and over again. So as of right now, we are heading towards the zero region.
Now, I talked about stock grid before on my old channel, and I don't have time in this video to get into it. But if you actually look and see how their methods are put together for compiling this quote-unquote rolling 20-day position, it's basically bogus. It's not really that useful at all. And it just serves to further this narrative that somehow the quote-unquote dark pool is a nefarious place where things are manipulated and institutions conduct their fuckery at the expense of retail investors. So I'm not going to get into that now. I want to keep this video short. The point here is that, oh, and by the way, the original executive order signed by Donald Trump back in November 2020, they say it was set to take effect on January 28th, 2021. Well, actually, if you look at the document itself, that gave people until November 11th, 2021 to divest or get rid of those positions. So it didn't happen instantly. Nothing happens instantly like that. It just doesn't work that way, especially when you're talking about institutions, large institutions and market players who have risk management protocols. They're not going to wait to the last minute. They're not going to jump the gun and do something irrational. It's just not going to happen, especially given what's already happened. Long story short here, to believe in this executive order narrative essentially is to discount and totally marginalize the effect of retail investors and the intense option chain activity that caused these gamma squeezes last year. And the difference now, of course, and this goes without saying, but I'll say it anyway, the difference now is, of course, that you don't have that type of engagement. The volume is practically non-existent in AMC. In these meme stocks, the volume has dried up, and you just haven't seen the volume. Without intense buying pressure, both in terms of shares of the stock and call options, this will never happen. And indeed, it has not happened since. So, in closing, these two run-ups are not a result of the executive orders targeting Chinese military companies and the factors that caused these two run-ups, namely incredible buying pressure from retail investors in terms of shares and call options. Those factors are not in play now. So this seems to be clout chasing, the wholesale of snake oil right here every day. And on that note, thanks for checking out the video. Be sure to join my Telegram finance chat group. The The link to that's in the description for this video. It's also at the bottom of the screen. Follow me on Twitter. Like the video if you, in fact, liked it. Subscribe to my channel and hit the bell for notifications when I post new videos or go live. We usually do 1 or 2 live streams a week, including a Sunday evening futures market opening live stream. So hope to see you there tomorrow. Otherwise, have a good one, and we will catch you later.